Thanks, Nat. All eyes will be on the Reserve Bank today, with the board to hand down its final interest rate decision for the year in the coming hours. Mortgage holders have been warned not to expect an early Christmas present, with the majority of experts predicting the official cash rate will remain on hold at 3.6%. Now, the only real question is, what might 2026 look like for Aussie homeowners, and could the rate rise be on the horizon? Joining us now is Shane Oliver, Chief Economist at AMP Capital. Great to talk, Shane. So how worried right now is the RBA about inflation and it continuing to go up?
Look, that's the big concern, Matt. Unfortunately, for the last 4 months, starting for the July inflation numbers, then continuing up until October, we've seen higher than expected inflation. So it was coming down nicely to the Reserve Bank's target of around 2.5%. Recently, it's gone back up again. And of course, the Reserve Bank does not look at the headline number on its own. It's at 3.8%. It also looks at the underlying measure, which excludes the impact of higher electricity prices. But even it's at 3.3%. So it's above target. It's above the range. They also focus on 2 to 3%. And that's primarily what's concerning them. And that's why they've gone from back in August talking about 2 or 3 more rate cuts to now sounding a lot more cautious. And I reckon that cautiousness will be even more evident today.
Outside of Westpac, the Big Four aren't tipping any rate cuts in early 2026. Do you think the majority have it here?
I think the majority do have it here. Look, I must admit we were down there with Westpac. We were expecting another cut, but I think the economic indicators have become too mixed. We are seeing those concerns about inflation. Last week we saw evidence that demand in the economy was picking up. We've still got lowish unemployment. All of those things suggest, well, maybe there could be a risk of a rate hike. On the flip side, though, some of the factors that pushed inflation up could prove temporary, and I think they will come back down, ultimately enabling the Reserve to leave rates on hold through next year.
OK, time to test your experience and your reputation. Shane, tell us, do you think there'll be a rate hike as early as February, as a lot of economists are saying there will be?
Look, I don't think so. I think that would be a big mistake. Obviously, a lot is riding on inflation numbers that come out over the next couple of months, but particularly at the end of January, we get figures for the December quarter. I reckon they'll show a bit of a cooling off in inflation, and therefore that'll enable the Reserve to just hold interest rates where they are. The other big concern I would have is if you start raising interest rates as early as February, that's really going to act as a dampener on the still tentative signs of recovery in the Australian economy. Just look at auction clearance rates, one of the most timely indicators of the economy we get. For the last week, they've actually shown quite a sharp fall in Sydney and Melbourne. And that's to some degree welcome, less pressure on house prices, but also means that home buyers are starting to get cold feet here. If they're getting cold feet, Australians, ordinary Australians, when they're doing their shopping, might start to get cold feet as well. So I reckon we won't see a rate hike in February, but I do concede there is some risk as we go through next year.
Bit of a suck it and see at the moment. Shane, appreciate your time. See what the RBA does today. Here's Nat.
Thank you. Thank you, Matt.